Okay, let's get going. Right, today we're going to run through IR35, the recent changes that have happened with some of the cases that have gone through the courts in the last few months, and also the off-payroll changes that are proposed for April 2020. And I'm going to give you a few ideas as to what you can do now to safeguard your position when April 2020 comes about. So this has brought everything up to date as far as I can go with the changes to IR35. So I hope this is as sort of relevant and as up to date as you can possibly be in terms of where we are with IR35. Obviously, IR35 has been around since 1999, so we're 20 years old now. And what is going to happen in April 2020 is probably the biggest change to IR35 that's happened in the whole of those 20 years. Going back to IR35, started Chapter 8 of ITEPA back in 2000, and what we're talking about here in layman's terms is that if you use a limited company to provide your services, and to the outside world you look like you're an employee of your company, then you have to be taxed like an employee of your company. That's the basics of what IR35 says. Now, what that means is that for the majority of owner-managers of companies offering services through their company, they want to take their money as a combination of salary and dividend, really to minimise the amount of tax that might be payable on it. IR35 gets rid of that option if it applies. So this has been around since 2000, and there's been lots of cases over, well, probably 20, 25 cases over those 20 years, setting out where we are with IR35. Come April 2020, there's actually a new tax. This isn't a change to IR35, it's actually a new tax. The off-payroll tax is quite separate to IR35. It uses the IR35 rules, but it is not part of IR35 as set out in Chapter 8 of ITEPA back in 2000. Now, the problem with IR35 over those 20 years is that it's always been very difficult to assess for both the taxpayer and HMRC whether you're caught by IR35 or not. The difficulty has always been it's a subjective test, and therefore there have been lots of cases that have gone through the courts over those 20 years, and in fact cases before that, going back 30 years before that, trying to decide whether someone is purely self-employed or whether they're really a worker. And these cases have given varying results over the years. I'm going to go on and talk about how HMRC have taken some very high-profile cases through the courts in the last few years. I'm also going to run through how the off-payroll tax changes will happen from April 2020. Now, in the last couple of years, or last 3 years, HMRC have taken 6 cases through the courts. They've chosen an odd selection. They've concentrated very heavily on presenters from TV in terms of the sort of high-profile cases that they've taken through the courts. And the good news for most IR35 potential companies is that HMRC have lost 5 of the last 6 cases they've taken through the courts. And if you take into account that HMRC choose which cases to take to court for all intents and purposes, they can choose the cases that they should win. What they've managed to do in the last few years is lose 5 of these 6 cases. So that's the good news for IR35 style companies. The bad news is that HMRC now intend to create another tax, the off-payroll tax, and apply that to the private sector from April 2020. These changes have happened in the public sector for the last year or so, but the proposal now is to extend them on to the private sector as well. So for the majority of our clients with their own limited companies, some have been affected when they've worked for public sector authorities such as HMRC or NHS trusts, that sort of thing. But the vast majority of companies are working in the private sector and haven't been affected as yet. HMRC have brought out a consultation document. You could call it a consultation document. It's a very short window of opportunity to talk about these changes to the private sector. It appears when you read the consultation, and I've given you the link there for it, it appears that it's just telling you what they're going to do rather than consulting about how they should do it. This consultation document closes on the 25th of May, and if you haven't read it already, you ought to really have a read of it so you can see what they're proposing. There's a number of campaigns trying to get HMRC to change their mind a bit about this. Certainly you can apply to some of those if you want to. I think that the truth is that HMRC will bring this in no matter what the consultation says, and we have to work with that. So what I'm going to do in this webinar, first of all, is show you what you can do to improve your IR35 position based on the cases that have gone through the courts, these 5 of the last 6 cases where HMRC have lost. In fact, I'm going to show you all 6. And what you can do to safeguard your position post-April 2020. And these are practical things that you can do today to start to safeguard your position post-April 2020. My first list, a very, very boring list of cases that have happened since IR35 was introduced. As you can see, there's a couple of pages of cases. The key cases to start to think about, if we go back through the history of IR35, in the first place, if we go to the early days, HMRC won quite a few cases when really the taxpayers didn't understand IR35 too much. So there were the occasional contractor win, like IMIT, but the vast majority HMRC were winning. That was the case all the way through to April until January 2009. And then since then, there's been a far greater success rate from contractors' point of view than HMRC. HMRC seem to think that IR35 goes an awful lot further than the courts seem to think. And so what has happened, and where we're going to start to look at these cases, is from February 2018. This was the first case in 9 years that HMRC won. Christine Ackroyd, a BBC presenter. That's the first case HMRC have won since 2009. So we're going to have a look at that, and then we're going to have a look at a similar case, the Lorraine Kelly ITV presenter case, and then finally Atoll Limited, which is another BBC presenter who again has won her case against HMRC. So we've got 3 interesting cases to look at really. Krista Ackroyd, BBC presenter, Lorraine Kelly, ITV presenter, and Kaye Adams, really an independent contractor for all intents and purposes. And we're going to concentrate on why HMRC won against Christina Ackroyd, why they lost with Lorraine Kelly, and what we can learn about Kaye Adams' case. So, let's go forward if we can. My screen is stuck at the moment. what's going on here. Okay, right. 3 recent cases, Peter Ackroyd, Lorraine Kelly and Kaye Adams. Ackroyd is a BBC presenter. She lost her case, her IR35 case, with HMRC winning, and she now owes £420,000 in back taxes. If I compare her to Lorraine Kelly, well-known ITV presenter, she was in pretty much the same position, providing her services through a limited company. Both of these ladies did pretty much the same thing. In her case, she won her case with HMRC, and her tax due is nil. Her tax due, if she had lost, I think would have been a couple of £1 million. And so what we can see here is that there's no halfway house in all these things. If you lose this case with HMRC, you owe all the tax. If you win, you owe none of the tax. And so it's quite important that you see the differences and then see how you can make them work for you in your case. I've tried to list out, I've been through the 2 cases, and I've tried to list out the differences between the 2 cases. Why should you lose an IR35 case as to why you should win? And it comes down to pretty fine margins. In both these cases, HMRC really chose them because there was no opportunity to use substitution in these cases. In both cases, the ladies involved had to present the shows themselves. So substitution didn't come into play in these cases. In most of your cases, you will have a substitution clause in your contract. And that substitution clause hopefully will allow you to put in any substitute you like. What we're working on at the moment with most of our IR35 style companies is to try and get what we call an unfettered substitution clause. A substitution clause that means that you can put in whoever you like to do the work. That's what we're trying to work towards. Obviously, there are some difficulties with some end users and some agencies with that, but that's what we want in your case. In these cases, there was no opportunity for substitution, so we can't talk about substitution at all in these cases when it comes to the courts. What we're relying on here, really, is all the other factors that decide whether you are caught by IR35 or not. And when I run through the 2 cases, the main differences, I've tried to list out for you here, the main differences in these 2 cases are that in the case of Ackroyd, her line managers, her BBC line managers, actually helped HMRC with the case. They were helpful in the way they explained how Peter Ackroyd did her work, how she was controlled by them. They certainly painted a picture that she had very little control over what went on. Now, to me, what this sounds like is that Ackroyd hadn't taken any particular advice about IR35, had just gone in and assumed that everything was fine, but hadn't gone off and explained to her BBC line managers how she was operating. If we now go across to Lorraine Kelly, in her case, the ITV line managers were nowhere near as helpful to HMRC. In fact, they sounded like they'd been primed by Lorraine Kelly to tell HMRC exactly how she operated and how she controlled the process to some degree. So what we learned from the very first part of this is that when you're in a contract that could be subject to IR35, it's very, very important that you tell your line managers within the organisation that you work at, the end user, that you are an independent contractor and you are operating outside of IR35. They need to understand that. And that's really down to you as IR35 contractors, going off and explaining to the line managers how you're operating. So that if HMRC come along to the end user, these line managers will know how you're operating, rather than just leave it to them to decide at a later stage. So as we've said to you all along, go along and explain to your agency and explain to your end user how you operate, and that explain your contract, explain your cases, explain the substitution clause, explain the control, and explain the differences between you as an independent contractor and anybody else who's working in the organisation as an employee. The line managers must see this. So in these two cases, I think if Ackroyd had explained to BBC line managers that she was an independent contractor, and they had that clear in their heads, probably there was a good chance that she would be £420,000 better off. And certainly when we look at other cases, there are other cases, other TV presenters that are going through the courts at the moment. When we look at those other cases, they're certainly making sure that line managers know a little bit better when to talk and how to talk to HMRC. So she was really caught out because she didn't control her line managers properly. Second point that comes across in all of this, once you take out substitution, substitution gives you the opportunity to be completely outside of IR35 if you've got the substitution right. But once you take out substitution from IR35, you're then working on the balance of probabilities of other things affecting whether you're self-employed or whether you're employed, whether you're caught by IR35 or whether you're outside of IR35. So what we then look at, and what appeared to be important to HMRC, was control. How much control do you have over the way that the work is done? In the case of Ackroyd, there appeared to be, from the BBC line managers' interviews with HMRC, there appeared to be very little control over the content. Whereas in Lorraine Kelly's case, there seemed to be a little bit of control over the content. And not a vast amount, and certainly the line managers were better prepared for the questions that HMRC were coming around. But it really came down to some quite fine details. When you go through the cases, and I can send anyone on all these cases afterwards, when you go through the cases, the control that Lorraine Kelly had was probably summed up in one particular instance, when she didn't bother to get up at 4 o'clock in the morning to interview Elton John. She exercised her control over her contract to say, I'm not going to get up now and do that interview. Her representatives at court played on that to a great extent, to show that she had some control over the process, over the way the work was done. And certainly the judge took that one morning into account, and that one morning of not getting up to talk to Elton John at 4 o'clock in the morning may well have saved Lorraine Kelly £2 million. She had a little bit more control over the process, or actually probably what happened is that her representatives at court, her barrister at court, probably explained a bit better how she controlled the process compared with the Ackroyd representatives, who were, when you read through her case, both her accountants and her representatives at court were pretty slack in the way they presented her case. In Lorraine Kelly's case, she had better representation at court, and she appeared to have better accountants in the background setting out how she should operate outside of IR35. But in her case, control came down to, did I get up in the morning to see Elton John? No, I didn't. And therefore I had control over the process. Now, in your cases, when you look at the way you operate with your agency and your clients, it's quite important when you see opportunities to note down how you control those processes, how you control the way the work's done. Make a note of those things. Keep a note of those things. If Lorraine Kelly hadn't kept a note, or someone hadn't found out somewhere in the background that she didn't bother to get up in the morning to speak to Elton John, then that would never have been able to come to court. And it may well have been that she couldn't exercise enough control over the process, and it might be that she owed all the tax. So in your cases, when you have the opportunity to show how you control how the work is done, you know, if you're setting up meetings, if you're setting up the way the work is done, then make a note of that and keep a note of that, because that could become very, very important when you get to court. You need to have notes of how you control the process. Go on to the two contracts themselves. As I say, neither has substitution. The Ackroyd contract was for 7 years. Lorraine Kelly's was only for 2. Now, in most of your cases, you're looking at sort of 6-month contracts, and we need to keep these contracts short. We need to keep them renewed, and they do need to be renewed. We can't just have one and then forget about it going forwards. So short contracts were important. If we then take what mattered in the two cases, I think that in the Ackroyd case, certainly her accountants and her representatives at court were pretty hopeless. You know, they barely understood what IR35 was in the first place when they started to talk to HMRC. In Lorraine Kelly's case, she had much better representation at court. A barrister called Keith Gordon represented her there, and if you get the opportunity to listen to what Keith Gordon is saying about IR35, then I would say that you should take that opportunity. I think he's going to be the sort of leading light in terms of how to put these cases to the courts when they come about and if they come about. That's really the differences between the two cases. It comes down to making sure your line managers know what you're doing and showing that you've got a bit of control over the process. We're then going to go on to one other case. Sorry, before we go into one other case, I'm going to explain what that means. Really, it means small differences tip the scales, as I say here. When a judge is weighing up IR35 now, he's taking all the information and on the balance of probabilities deciding whether the tax is due or none of the tax is due. And so if it's a 49-51 in your favour, then there's no tax due. If it's 51-49 against you, then all the tax is due. So it's very important that we have little differences amounting up to those that odd percent or two to make the overall difference. In terms of this, don't make stupid mistakes like say you're employed at Barclays on your LinkedIn profile or something like that. If that's where your end client is, make sure you're always saying you're an independent contractor currently contracting at such and such. Don't go and do anything that an employee might do. Don't go and have the staff Christmas party for free. If you're going to go on a staff Christmas party, go and pay for it. Don't go and take a staff discount if it's available for staff. You're not a member of your end client's staff, so you can't take those sorts of things, even if they make them available to you. And do make sure that you talk to your line managers and explain why you're doing those things. In terms of control, as I said earlier, you've got to note when you actually control the process. Just like Lorraine Kelly did, she, or someone in her organisation, noted that she was controlling the way that the work was done. If you get any opportunities to note down how you controlled how the work was done, then certainly keep a note of those, keep records of those, because it could be HMRC come along in 2 or 3 years' time and argue that IR35 applies. These little bits of information, these little snippets of information will make all the difference. Now, one point I didn't bring up a little bit earlier was mutuality of obligations. This is the right to be offered work, or the right to accept it, or the lack of right to accept it. What we're looking here is ideally you don't have an ongoing right to be offered work, and you don't have and you have an ongoing right to reject that work. We want a lack of mutuality of obligations. And so any time that you do reject a bit of work, or you're not offered new work, then again we need a note of those sorts of things. If you know you're offered some extra work and you decide you won't do that because you want to do something else, then let's make a note of those things so that we've got them if it comes to an HMRC inquiry at a later stage. I'm now going to go on to a third case. Again, this case, the taxpayer won. This was Kaye Adams, who evidently is on Loose Women in the morning. It was a pretty odd case for HMRC to take forward because there must have been much easier targets out there. Kaye Adams worked for on lots of shows and did lots of other work. But for some unknown reason, HMRC decided that this was the right IR35 case to take to court. And unfortunately for them, they have lost again. But there was something quite interesting in this case. In this case, in business on your own account became quite important. I've said here it's a new concept. It's not really a new concept. It's just become important in this particular case. What happened in this case was that the courts looked at Kaye Adams' overall business, not the individual contract. In the past, what's happened is the courts have looked at each contract and decided whether that contract is within or outside of IR35. In this case, they said, right, there's all the contracts, but we're also going to look at the way Kaye Adams operates. And in her case, she could show that she was in business on her own account. Now, what does this mean to you? Well, I think it, again, becomes important that we can show that you, when you have your own company and you've got the risk of IR35, that you can show you're in business on your own account. What does that mean? It probably means that, you know, maybe you should have a website. Maybe you should be publishing some things out there, looking for work. Maybe putting some publications in on LinkedIn, your expertise or your professional expertise. Maybe having a website where you list out some of these things and you promote your business for further work. I think that those sorts of things will start to be looked at by the courts, and might be the 1 or 2% that you need to move from a 51-49 against to a 49-51 for you, and avoid all the tax that's due within IR35. So I think one thing we haven't really concentrated on for a lot of our clients was actually having a website, having some professional publication going on, you know, via LinkedIn or something like that for each of the clients. But I think that's something you could certainly consider doing going forwards, writing a few posts or articles, having a website that shows that you are looking for business. So that case, again, lost by HMRC. HMRC have got a number of other cases going through the courts at the moment, and we wait to see what the results are. But I think that it's proving that HMRC don't really understand what IR35 is. They think they know what it is, but when they get to court, they find out that they don't. And so it's as difficult for them as it is for us. Now, what they have got in the background, and what has been much maligned over the last few years, is their status checker. Their status checker, I think in most of those cases that went through the courts, the status checker said caught by IR35. But as you can see, 5 of the last 6, the court said, no, you're not caught by IR35. So the status checker isn't that reliable for a lot of cases. But what I want to show you is why the status checker is quite useful for you if you've got the right sort of contract, and how you can use it to help yourself, and actually how you can use it to help yourself going forwards come April 2020. I've given you the link to the status checker there, but I'm actually going to take you through it and explain how we're going to use it going forwards. Before I do anything, I want to explain what off-payroll tax is post-April 2020. First of all, it's not IR35. It uses the IR35 rules, but it's not IR35. With off-payroll tax, there's a concept of the fee payer. This is generally the agency, if there is one. Otherwise, it's the client. And it's going to be the fee payer that pays the tax, not your company. Within IR35, it's your personal company that pays the tax. But within off-payroll tax, it's the fee payer that pays the tax. The client, the end user, must assess whether IR35 applies, and the fee payer must deduct the tax. So here, it's going to be the client that decides whether IR35 applies, and that's why it's very important that you start to talk to the client now as to what your position is, and explain to the client as to why IR35 doesn't apply if it doesn't. So the fee payer must pay over all the taxes as if they're a simple employee and caught by IR35 on the salary. So employers' national insurance must be paid on top of the contractor's earnings, and this is called the indirect payment. But from your point of view, what's going to happen here is that the fee payer is, if he thinks, or he or she thinks you're caught by IR35, come April 2020, they're going to deduct tax and national insurance from your pay. And there's going to be nothing that you can particularly do about that. You're just going to get this pay out with tax and national insurance deducted. And for the majority of contractors, that means a lot less net pay in their hands. If the contractor is wrongly processed as outside of IR35, then it's the fee payer who's liable to tax, not the contractor. So if we take that, what a fee payer is going to do, they're probably going to say you're caught by IR35 because they don't want to take any further risk. And so we have to get them educated to understand how IR35 really works. Now, what I'm going to do is take you through how we would educate an agency or an end client as to why IR35 doesn't apply for hopefully a lot of the clients that we have when they've got their contracts and their engagements correct. The assessed tax checker, as it says here, allows you to test your status for employment versus self-employment. And I'm going to run you through this test now. If we look at what HMRC say on the test, HMRC won't stand by the results if you go through and you arrange for the results to be either deliberately compliant or non-compliant. And so you've got to do this honestly when you go through the tests. You can test to see whether you you need to apply IR35 or you don't. But it must be honest, and so that's what we're going to do here. We're going to run through the tests. The very first test, which of these describes you best? The worker, the end client, the agency, or none of these? Well, I'm going to just do this as if it's you, the worker, but I'm going to suggest at the end that you get the agency to do the same, and most importantly, you get the end client to do the same, because they're the ones that are going to decide whether you're caught by IR35 come April 2020. So we want them understanding how this test works. So let's do it here. We're going to go on from question 1. Question 2, has the worker already started this particular engagement for the end client? I don't mind whether you say yes or no here. So whatever the truth is, let's assume it's yes, assume it's no. It doesn't really matter because we're going to get the same questions as we go forwards. So we assume it's yes here. How does the worker provide their services to the end client? Well, in virtually every one of our IR35 clients' cases, it's going to be via a limited company. You're going to provide your services to the end client using your own personal service company. So I don't think we've got any questions about those first 3 answers. Will the worker or their business perform office holding duties for the end client as part of this engagement? An office holder, in the strictest terms, is a director or company secretary of your end client. Now, I very much doubt that you are a director or a company secretary or a position like that within your end client. But if you are, you ought to think again about your status. I would take this a little bit further and say that if you're holding yourself out to be, say, head of HR for your end client, maybe you should reconsider your role, because that sounds like you're in, it may not be an office holder, but it sounds like you're in a position part and parcel of their company, and sound a little bit like you're an internal part of the company. So for most of our clients, they want to be independent professional consultants currently consulting at such and such, and that wants to be the work that they're doing. You're not part and parcel of the organisation. And so we should be able to, in most cases, answer no, you won't be performing office holding duties for an end client. Now we're coming to the more important bits. Has the worker's business arranged for someone else, a substitute, to do the work instead of them during this engagement? Well, I think in most cases, we're going to have to say, as I've said here, no, it hasn't happened. You've never arranged for a substitute. But if you could answer this, yes, and the client has agreed, that would be great. If you could answer it, yes, but the client did not agree, I don't quite see how that would happen, because either you've put a substitute in and the client agreed, or no, you've never done it. But if you could answer it yes and the client's agreed, even better than no, this has never happened. But I think for the majority of our clients, we're going to be saying you've never put a substitute in. And I think you'd have to answer that question like that. If we go on to the next one, this is the key question, and this is what you have to get across to your end client and your agency. If the worker's business sent someone else to do the work, a substitute, and they met all the necessary criteria, would the end client, and I've highlighted it here, ever reject them? So what we're saying here is, if you sent someone else in to do the work, would the end client ever reject them? If we can say no, the end client would always accept the substitute who's met all the necessary criteria. They show you what criteria, sort of security checks and those sorts of things. Then we would be in a very good place to be able to get out of IR35. And so what we're looking at here is for your contract to say that you are entitled to put in a substitute to do the work if you can't do it. And we would want that contract to say that that substitute could be chosen by you and not by your end client. Now, you might turn around and say, well, that's not what my end client's going to agree on. But what we're suggesting here is that you have a substitution clause that allows you to put in whoever you like to do the work, and in exchange you offer a no notice get out to the client, no notice period get out to the client, so that if you did decide to put in a substitute and it was a dummy like me, for example, then what would actually happen is that the end client would simply cancel the contract. They would never have to reject a substitute because they could just cancel the contract anyway. And so where we're looking at with your contract is to have a completely unfettered substitution clause, your right to put in whoever you like, assuming they're security checked. And you then explaining to the agency, explaining to the end client that, okay, I want this clause in there, but what I'm going to give you in exchange is the opportunity to cancel this contract with no notice period whatsoever. We really need it to be like that if you want to get out of IR35. And more importantly, get out of IR35. We want it to be like that because we want to be able to get you out of off-payroll taxes come April 2020. If we've got the end client to accept that they would always accept a substitute, so that they would go through these tests and say that the answer I've given there, no, the end client would always accept a substitute who meets these criteria. If we can get the end client to accept that that's the case, and we can run them through HMRC's tester to accept that's the case, then we're going to get to a point, showing you where we're going to be further on, we're going to get to a point where the end client would show, according to HMRC's tester, that you are outside of IR35 and therefore off-payroll taxes do not apply to your payments. If we get to that point, we're in a pretty good position to keep you outside of IR35 and also outside of off-payroll taxes. So we need the end client to understand what's going on here. We need them to understand the fact that you need an unfettered substitution clause, and you want to be able to have the right to put this person in, but we're going to give them the opportunity to cancel the contract if you put the wrong person in. The idea would be that you go and replace yourself with someone else equally as capable as you, or even better, and the end client is happy with that. But if they're not, they just cancel the contract. So we want to be able to run through this and be able to answer if the worker's business sent someone else to do the work and they met all the necessary criteria, would the end client ever reject them? We want to be able, the end client to be able to say, no, the end client would always accept a substitute who met these criteria. And that's a matter of you showing them within the contract why that's a safe option to go down. If we can get that, then our next question would be, would the worker's business have to pay the person who did the work instead of them? And the answer, of course, would be yes, of course you'd pay someone if they did some work for you. And once we get that, we get the intermediaries legislation does not apply to this engagement, which means IR35 doesn't apply to this engagement. Now, what's important about that come April 2020 is that if IR35 doesn't apply to the engagement, then off-payroll taxes do not need to be deducted by the fee payer. So the agency will no longer need to deduct tax and national insurance from your pay. But what you've got to do is get the end client to accept that's the case. And so what I'm saying now is that from this point onwards, you really need to be running through with the end client and with the agency HMRC's status checker with your contract and see if you can get them to the point that they agree with what we've come up with here, that IR35 doesn't apply. Because if they agree that, if they can run through the tester and agree that that's the case, then they don't need to deduct off payroll taxes from your pay. Now that's going to be to their advantage because they're responsible for employers' national insurance in your pay. And so they're going to be receptive to this to a degree. But it's got to be the truth. If I take you back to one line that HMRC say in the status checker, and that is the line that's highlighted in yellow here. We need to know that this would happen in practice, not just what it says in the contract. So we need the end user to be accepting that he or she would allow this to happen in practice, and would allow you to put in a substitute, given that they can just cancel the contract anyway. So that's what we're trying to get to, and that's why it's important that you now go along to your end user and get them to go through the status checker now, because if we can get to the point that they're happy with the position, and they can decide that they will pay gross, then we're back to where we were in the first place. Are you caught by IR35 or not? And if we look at the majority of cases, the chances are, you can never guarantee it, but the chances are you are not caught by IR35, especially if you've got that substitution clause in there. If you haven't got that substitution clause in there, then we're relying on that balance of probabilities of all the other things like control and mutuality of obligation, and making sure your line managers know what's going on. Now, what to do next? As I say, talk to your end user in your agency. See if they'll go through the HMRC CES checker. See if they're willing to talk about the sort of contract I've mentioned here, an unfettered substitution clause, but no notice period. Walk them through the tests and keep the results. And the key is that we're trying to get them ready for April 2020, getting them to accept that actually, as the fee payer, they agree that you don't have to have tax and national insurance deducted from you. What you can do, well, certainly you can make sure that you do take into account those things on the Kaye Adams case, for example, in business in your own account. Get those odd percents up. Have a website. Publish some articles around your professional expertise. But most importantly, you need to get your end user, your agency, to run through the CES checker and see if we can get an answer early on as to whether IR35 or off-payroll taxes apply. I hope that's been useful. Here's my my get-out clause. These are just our thoughts here at PJCO. We can't guarantee and do not guarantee that HMRC will agree with us, but given the uncertainty around the whole IR35 arena from both HMRC's and the taxpayer's point of view, I think you'll agree that some sort of action must be, on your part, must be worthwhile at this stage. And so what I'm going to suggest, as I say, is that you go off and you try that test with your end user and see if we can get a position where we can see that off-payroll taxes won't apply in April 2020. I hope you found that useful. If you've got any questions, certainly you can put them in the chat. I don't think I see anything there. So I'll give you a second to ask any questions. If not, I'll say goodbye. And if anyone's got any questions afterwards, please let me know. Thank you.